Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today is Friday and it's our second webinar for this month. First, before I continue, I would like to apologize. My voice is a little bit down. I have a fever, so I'm going to have to make this as quick as possible as my head is spinning. So I'm sorry about that. I am going to answer questions only through after the webinar or during emails or phone calls. So question and answering session, it will be absent today. However, first, before I continue, I need to make a small reminder about our demo contest. Today is 24th. You have 2 more days to sign up for the contest until the registration ends. That would happen on Sunday this week. Of course, for any further questions about that contest, which would last until March 17, 2017 at 2200 hours GMT. Cash price 10,000 divided among the first 6 as in order. First place takes 2,500. 4,000. The second place takes 2,500, 1,500 for the third, 1,000 fourth place, fifth, 600, sixth, $400. Now, of course, eligible for the contest are only individuals with age of 18 or higher. For any further questions that you might be interested into, you might go to our website, GDMFX.com, and of course you can ask our support department. The chat will pop up straight away from the bottom right corner, and you can ask any question you like, despite even if it's not for the contest, of course. Whatever questions you might have, you can forward them there, or if you need an immediate attention towards any case of yours, you can always do that over there as well, or just find our telephone lines directly to our office if you have something urgent on your mind. Now, today's session, ladies and gentlemen, we will talk about another binary option system. It will involve 2 indicators, the relative strength index and stochastic. However, the relative strength index is not a mandatory in this case, as it's more of a let's say another reassurance of market direction. However, as we know that the stochastic indicator have a trend line and also a signal line, which of course constitutes pretty much the same way. However, using the same period, the relative strength index is much faster, and if we have it on our side as to point to the same direction as the stochastic indicator, of course that would give us a bit of advantage. However, first of all, before we get confused about anything else, I will start the system with the stochastic oscillator only. As to the fact that the relative strength index needs to go on top of the stochastic, and it will be much more easier if we understand the basics of the system. Should we only take the first steps for this specific system, which of course is something that I also have to mention. It's a rather conservative type of system because it relies more on a price action according to also compared with indicators rather than indicators only and then price action to find a barrier entry, simply because we're focusing on let's say to grab the top and the bottom, okay, for a trend towards a correction or a continuation. It really doesn't matter as long as the rules of the system are met. And the fact that it's suitable for multiple type of time frames, also multiple type of time frames for call and put entries as well. However, I will only review the one time frame for entry and exit, which is, let's say, much more favorable by me. I would prefer to take the 15-minute chart. The entries could be much more frequent during the day. Possibly we could get about 3 up to 4 or 5 probably entries. It's a system that more relies on the certainty of a market direction rather than quantity of trades. So quality instead of quantity. On our previous multi-time frame binary option system on Wednesday this week, we spoke about another system which is a bit more risky. However, it is also with a success rate close to 80%. This one, however, goes close to 90%. As long as the rules are met, the certainties can even climb even further. So basically, the system has been initially developed for Forex trading as a type of a convergence divergence. In this case, it's the divergence side of the market rather than the convergence, because having in mind that the stochastic oscillator as it is, let me just show it to you straight away on the chart. I have it here ready. Periods 533 for the stochastic. We're looking at a 15-minute chart time frame. Therefore, I'm just going to zoom it in a little bit, so we can better see what we need to see at this case. Now, having in mind that the stochastic oscillator is a relatively fast moving oscillator indicator, what we need to spot in these cases is the case for where the market or the indicator finds itself down below that 20 area of the so-called oversold conditions and the crossover of the trend line with the signal line. I can't really position it straight on top of it, but let's say this is the zone that we are focusing in. Probably I should have done this instead, just to put it on top of the chart so we can have it better. Okay, like this. Also, as you can see, the particular area that we're focusing is this. This is the market that we're looking at, and of course the area of the oscillator here. Now, why are we focusing on this particular area? You can see that the direction of the market is currently to the downside here, but our oscillator is pointing to the opposite side, the upside. So the lower the market goes, and at the same time the higher the indicator goes, that means that at the point of a crossover, at the point of a signal candlestick, which is this one, we have a valid trade signal to go in. Now, simply because we do understand that this is a type of trading, binary options trading, that every pip matters, which means we need to catch all possibilities here. Because this system is mostly focused on quantity instead of on quality instead of quantity, therefore we need to find the absolute bottom. Now let's check that out. As we have already mounted this as a particular tradable area, we still don't know how the market would develop. Now this is what we see here at this corner. When we start seeing that the market have been has started to bottom out, let's see if we can manage to hide a few of the candles. Okay, let's say we're here. This is the last candlestick before the signal, which occurs over here, as you can see. Okay, now what we need to do the next time is the first time this candlestick closes, we need to draw a type of a trend line. Okay, now let's put it on Ray so we can extend it. Also, the same applies for that stochastic and with its bottoms here. Now, the crossover of the trend line in the signal line of the stochastic can only actually signal a particular reverse. We're not really focusing on those crossovers. Of course, they're also important because every entry should happen after such a particular crossover like this one. But what we need to take from all of this is the bottoms of the trend line. And when I mean a trend line, I mean the stochastic's trend line. So we can see that in this case, market is going down, indicator is going up. And as you can see, somewhere in the future, those trend lines will diverge. So basically, that's why it's called a divergence type PC. It's going to a point of the whole idea here is to look for when the market is making every time a new low. So every time the price action makes a lower low, but the indicator makes a higher high, we have that particular divergence here. Now, as we know that every pip matters here, this trend line must remain intact within the next candlestick, which is your entry. And your entry is over here on this candlestick. Okay, that's about a pip and a half, something like that. For a Forex trader, this would mean absolutely nothing because that's just one pip profit, which is, let's say, a pip and a half. This is almost just about enough so you can fight off the spread, which is of course relatively tight, down to one pip, but that doesn't matter because your profits would be insignificant. However, for a binary option trader, it doesn't really matter if it's 1 pip or 2 pips or 100 pips. It all matters in a means of entry. So the more accurate your entry is, the more certainty we have that when that clock expires at the end of that option, we will collect our profits. Now, the sooner the candlestick or the price action touches that trend line, doesn't matter if it's going to go lower, because at the time the session ends, it is bound to bounce off of that trend line and stay above it. That's why the closer you get to that trend line, the better. This is only one case. And as we already know what the rules are, first, for the so-called call positions, you need the market to have making every time a new low, but the indicator at the same time to make a new higher low from the previous. So first of all, we're looking at the indicator, then we're looking at the price, whether it's actually valid at this case, and then we move on to the position that we need to open, and we have to do that as soon as possible. Also, the expiry of that binary option, for me personally, I wouldn't leave it for more than 2 sessions. Being absolutely honest with you, depending on the market, the case we are, sometimes one session would be enough, sometimes 2 sessions would be enough, but let's say 2 sessions, 1 to 2 sessions expiry would be absolutely enough. Now, why am I focusing on 15 minutes? Because I like to use the 15 minutes expiry based on the fact that I can focus every 15 minutes on something else. Okay, and when I have multiple instruments to trade with the same system, for example, maybe every half an hour I would get a valid trade. So every half an hour with approximately $100 and a payout slightly above 80%, let's say, you would get every half an hour $80. Or if you are trading with $1,000, you will have $800. Just an example. It doesn't really matter what the payout is. It doesn't really matter what the odds are. Based on the fact that the system is reliable, it makes little mistakes. It's almost flawless. I can't really say that it's 100% flawless because it really, depends on the trader's reaction when the signal occurs. Because as we already know, a Forex trader could somehow get out of a position or squeeze a profit out of a losing position simply because if you made a mistake on the initial entry. But a binary option trader cannot afford himself to make mistakes on entries, and every entry should be calculated. It should be specific. It should be on time, and if you cannot do it on time, if you lost the moment, you better stay away. Don't enter now. Just find another tradable instrument. There are many out there, and there is more time. So you better survive it instead of risking something which has already passed. You might find yourself lucky a few times to surpass certain criteria of a mistake like this, but don't count that every time this would happen. Now, simply because the system is more conservative than any other binary option system, very few signals could occur, especially when we speak about extremely volatile market. When the market is choppy around news, simply a divergence like this one would rarely occur, because what we would see is sharp moves like this. The indicator goes down below that 20 level and straight off bounces off to the upper side, as you can see here. But this is not a valid signal, because we have the indicator and the price action within the same direction, so there is no divergence here. But we have one over here on this one, and as we can see, same conditions. Okay, let me just get rid of these so we don't get the chart too complicated. Especially after a few of our traders just asked me to to make it as simple as possible. Sometimes they have a hard time to understand some of the terms, so I'm going to try to speak even slower sometimes, if possible, to explain in details. But that's why you can ask questions anytime you like, without a problem, whether it's on and off the topic. It doesn't really matter. So we can see that divergence over here as well. You see that, and this session again to the downside. And of course, the trigger line is this candlestick, which forms another top, and after that crossover, as I mentioned, this is our trigger from where we can put an entry and execute a profitable 15 expiry binary option trade. As you see, it's again a divergence. So earlier I've mentioned about the relative strength index, that we could use it to verify trades in addition. It's more of a, how to say, to tie your pants, just in case, for example. That's one thing we can do. Another thing we can do is just use the system as it is. You can see how very few chances we've got with the system, but it's a quality trade always. And this is also a case that you can take, although it's relatively flat. However, in these cases, we we're used to, let's say, let the trade go instead of rushing into something which could lead us to uncharted territory, let's say lose money, for example. We can see that this is also relatively flat, you see. Even after this particular crossover, which happens on a high volume trade, we can see that this candlestick is relatively uncertain. So in trades like this one, without a very well distincted a particular top and bottom, we're used to, let's say, just cut the trade go. We don't really need that. Same as here. We don't have a distinct top and bottom, or let's say two low lows. And the price here is also not forming a particular case of a bounce off or a retracement case as it is. So as I mentioned, the quality of the system is higher than the quantity of trades. However, if we take, for example, this case here we have one high and here we have another one. You can see that straight off you have another case scenario like this one. Here it is. These are the two distinct tops. One is higher, the other one is lower. The price here is higher, the next one here is also higher, and of course it follows breakthrough to the downside. Now this is also another case you could take. You can see here, let me just use this one instead of taking a new one. Okay, we have that particular case, two small top bottoms here. Also in this case we have the price going low and again lower and then bouncing off. It's very distinctive to see when the price is going to retrace. You see, it's when you start looking at these trades as well as you should in time, you will teach yourself how to significantly decide when exactly to enter. You see this one? It's one top bigger and another one down here. This is also the so-called triple top, but we're not really using that term in this case because we're looking at those two specific tops, which on this one you see the price, one of it is higher than higher and this one is higher and then lower. So this divergence is very important to occur when we are in terms of to significantly, you see this one here again, and also the price going down and then bounces off again and back up. So these cases when the trend has been very aggressive, what we see is a very sharp move down and then at the same time with the same force a very sharp move up from that indicator, which of course indicates an imminent retracement, which system, however, is initially been developed for scalper traders. Basically, you do understand that to scalp the market doesn't necessarily mean that you have to have a position every 5 minutes or every 1 minute. You know, that's a decision that you have to make. Scalping means that you stay within minutes in a side of a trade. It doesn't matter how many trades there are. So even if you have one trade per day, but that trade is as certain as 90%, now why wouldn't I just scalp the market by entering with a very heavy lot? Let's say if I'm a Forex trader and I'm going to scalp that market for 2 sessions, not more, even 1 or 2 sessions, let's say, that's about 9 pips. So with 10 lots, that's $90, which means with 100 is 900. So you can see how it multiplies. But the fact that you're staying only 15 to 30 minutes inside of a trade, that's a pretty good deal, especially when you have a very good balance inside your account. So all of this is considerably in our favor. Well, that's all about the strategy. There's nothing complicated about it. one thing is for sure, we have not encountered even one failure so far on one currency pair, and that's since the beginning of the month. And we've had like 5 or 6 potential trades here. So if you make 5 or 6 trades with, let's say, $1,000, and you get, let's say, approximately $800 every time. So you can see how that could happen to be a very good a paycheck at the end of the month. But this, of course, is for serious traders and most of all conservative type of traders, of course, which measure the risk very carefully. One of my favorite trades, one of my favorite systems. It's very neat. It's a type of system that could be used, let's say, when you're in vacation, because it doesn't really exhaust you to watch the market for so long. You can see that it's forming here and there. You know, for one day you can have 2 trades, like this one, for example, here, and this one here, as we mentioned. So 2 trades per day with, let's say, if you're trading with 1,000, at the end of the day, if you walk out with almost doubling your account, let's say, that's a pretty good deal, I would say. But this is only an example. It doesn't really matter that you would take it under consideration or not. You would, of course, have to think about the percentage of risk when trading as well. It doesn't matter if it's binary options or Forex. So this was all about the system of today. I will just let you think about it. Whatever questions you might have, I will not be answering them today, as I'm quite feverish, as I mentioned earlier. I'll see what I can complete until the end of today, and of course see if I manage to answer some of your emails, which I'm about to receive in the next few minutes. And of course, I'll talk to you again next week on Wednesday. Sorry, on Tuesday, and on Thursday, as I mentioned, March 3rd is our national holiday here. The office is not going to be working. Therefore, the last 2 webinars of the so-called monthly series of webinars would be on Tuesday and Thursday. Therefore, the price action-based trading systems part 1 and part 2 would take place next week. Until then, whatever questions you might have, just throw them in, and of course, please like or subscribe. Thank you for joining us. I'll see you next time. Bye-bye.